Massacre on the beat!
What's going on, everyone? It's yours truly, Elwin Coleman, and this is the very first episode of the Winlife podcast. Now, why are we doing this podcast? A lot of you may know me from trading, from music, from Instagram, the internet, all of that good stuff. And for the past 1,200 days, I've been on a trading journey. And this trading journey has changed my life. It's taken me from someone who was financially irresponsible, someone who lived paycheck to paycheck, someone who had lofty goals, big visions, but no actual way to put them together. So the reason I'm doing this podcast is to reach more people, of course, and help more people, because the more people I can reach, the more people I can help. And I think this is a nice change of platform because my students know me from Winlife, from Forexia, from our trading communities and our Telegram chats. It's a whole world that goes on out there. So if you're not too hip to it, if you're just finding us today on Spotify, Apple Music, YouTube, guys, we've been behind the scenes making things happen for years. And by making things happen, I mean perfecting our craft in trading, in investment, and building the businesses. And we kind of just came together out of a necessity, not having others that were doing what we were doing, that were attempting to change their lives. So many of us are breaking generational curses. Many of us are forming new legacies. And that's why I'm doing this podcast, to expand the reach to even more. Okay. So this podcast, what can you expect from it? Of course, we're going to focus on building mindset. We're going to focus on you living out your dream, you turning that mental movie into a real thing, whatever it may be. But this is not going to be like your average Forex or, Instagram mindset program. No, we're not a scam, guys. We actually offer practical application to what we do. So we're combining that yin, that yang, that feminine, that masculine energy to make the ultimate creation. Right? So I'm glad you're here. We're going to learn together. We're going to learn as a team. We're going to grow together. We're going to grow our wealth, our community, our network, our net worths. And focus on wealth building and trade mastery, as well as other means of investment. If you follow me from the trading community, from the Forex community, trust me, all those skills you are learning, they're invaluable. They're so valuable, guys, because what it gives us is the ability to understand markets like no one else. Through that study of technical analysis, it's taken us to the other side of breaking down charts. Now we need to put the whole thing together, that yin, that yang. So we will focus on the fundamental side of things. What's going on in the world? What people are doing, right? People make up the market. And we're going to have fun along the way. We're going to crack jokes. We're going to do what we do, right? At Winlife. And we're going to have some awesome interviews. We have some awesome guests lined up. So we'll be revealing the guests pretty soon. I'm sure you can guess some of the guests based on who my friends are. Just know my friends will be a part of this, and I'm going to take them there. I'm going to ask them those questions, so it's going to be a lot of fun. And let's get into the first show. So I really want to thank all those who have made it this far with me. So our first episode today, the reality of building wealth. The reality of building wealth. Nothing happens overnight. Even if you get a lump sum of money, you need to turn that lump sum into something that will hold you over the rest of your life. We learned through day trading, we can bring in an income on a daily basis. But what if we can't trade for some reason? What if you are some athlete, NFL player, NBA player, and you get hit with a lump sum of money? Now, let's say you make $2 million for a 2-year contract. You rich, right? You fly, you flashy. Let's think about it. 20% of that 2 mil goes to your agent. Half of that gonna go to taxes, right? You're in a higher tax bracket. You got to pay your trainers. You got to pay all your bills. You got to pay for your meals. You got to pay for your housing. That 2 million gone, right? 60% of NBA players go broke within 5 years of leaving the league. 76% of former NFL players experience financial distress 2 years after retirement. Why am I bringing this up? Because those are some of the people getting that big bag. These are people that have gotten to the millions, what we aspire to. In the community I come from, everyone dreams of being the next rapper, the next star basketball player. But what I've learned over time, that those aren't the real heroes and superstars. Yeah, they do demonstrate excellence of their own form, but we talking about getting to the bag. We talking about money. So who are some of the superstars we look up to? Those that have came from humble beginnings, that have used self-discipline, self-mastery, manifestation, modern day alchemy to turn that vision into a real tangible thing. The Jeff Bezos of the world, all of those Elon Musk, all those players we know. But there's a lot of players behind the scenes, those who don't get the recognition, those who don't necessarily have the clout. And we know the clout means nothing. This podcast is for those who want to win at life, those that want to help people, those who want to get their vision out there, get their dream out there. If you're more so focused on appearances, gaining that clout, looking dope for the gram, stunting for your friends, then that's not winning. We'll go into topics like that, escaping the vanity of it all, escaping trying to impress others, using that energy to focus on your goals. Okay? This is the reality of wealth building. So one of the most important things is you have to have that lifestyle in check, regardless if you are that star athlete. If you are that star athlete, you need to invest. You don't need to go buy jewelry. You don't need to go buy a new Bugatti. Buy you a used Beamer, right? Lease your whip. We have to think far. We have to think smart, guys, right? We have to think far ahead. So live within your means. Even if you make $500 a week at your job, do you really need that apartment? Maybe stay in the studio, maybe get roommates. Do you really need to be buying Jordans? That is going to be 50% of your weekly income. 50%. You're going to be check to check struggling. I mention these examples because I know hundreds of people who do this, that live like this. So we need to escape that way of thinking. We need to free our minds like the Matrix. You feel me? So have your lifestyle in check. Make sure you actually have some type of way that you're managing your budget. And I'm using something called Every Dollar. It's a new app. I got it recommended by one of my fellow traders, someone we will likely be interviewing soon, Shane. You guys know Shane with St. Macro Trading. With having your lifestyle in check, you need to have your budget in check. You need to have a budget for each month. And in that budget, you need to pay yourself. Every month, it's important. And that's what I've learned over time, because I'll always find a way to trick off my money. I'll always find a way to spend that little over, that extra. And I'll tell you, you pay yourself, because if you don't, you're just going to spend that money. And I can tell you, people will live within their means. If they get an extra few hundred, if they get that stimulus check, they're going to find something to spend it on, and they will justify it. We're emotional creatures, and we get super emotional with money. So we will justify that spending. We'll make excuses. We'll make excuses for ourselves. So what we need to do is stop making excuses. Look at the whole picture. Look at things directly, right? So we need to get our lifestyle in check. We need to have a budget each month. We need to have a reality check, right? This is what this is about, the reality of wealth building. So what do I mean by pay yourself? What I mean is portion off a part of your monthly income. So if you're working at a job, or if you have a small business, or whatever it may be, you need to manage your funds. Know how much you have you're bringing in regularly, even if it's not a consistent amount, it's a range. Maybe you're a ride share, DoorDash, something to that effect. So it's not an exact amount, but you should have some type of general range. From there, you need to take a percent of your income. I recommend 20%. Okay. And you need to put that money in investment vehicles. These investment vehicles you could pick. We'll go over them here. Okay. But this is how you're going to protect yourself. This is how you're going to grow your wealth. And trust me, it starts small, $100 here, $200 there. But look, you 10X in a year, I'm telling you, that $1,000 you put in becomes 10,000. That 10,000 you put in becomes 100,000. That 100,000 becomes a million. I've done it on my scales. In my means, I've seen others do it. And it's all about compounding and growing. And we can't just have our money sitting in a savings account. We can't have it just sitting under our mattress. Okay. We need to invest. That's how we're going to grow that money. So why do we need to invest? Why can't you just put your money in a savings account? Let's think, people. What happens every day, every year, in every country? Inflation. Okay. So with inflation, the value of the dollar, the peso, the yen, the euro depreciates every year, at rates as high as 5%. In some countries, you ever notice in some countries, it's like 1,000 pesos is equal to $1. You think the currency started out like that? No, that's the inflation. And what happens is the currency loses value, right? In the 50s, you could probably go to college for 10 grand for your all 4 years. I don't know. I'm throwing that figure out there. But today, 10 grand won't get you a semester. So the value of the dollar depreciates. You sit that money in your savings, it's going to do nothing for you, my friend. So that's the reality of things. All right, the end. I'm joking. Okay, so what do we do? What do we do to counter inflation, to counter the depreciation of that dollar? How do we grow our money? Because wise man once said, you cannot get rich by saving. You can't get rich by working an hourly wage and saving. Trust me. You can maybe save up for a new car, that down payment on a house, spend 30 years paying off that mortgage. That is fine. That's the life if you want to live. But this Winlife, this movement I'm talking about, is how we're going to be paying off 30 years. We're going to get the 30-year mortgage, but we'll pay it off in 10. We're going to look into getting other real estate. We're going to maybe buy that house and decide, you know what? I'm going to remodel it and put it back on the market because prices are at an all-time high. So we're changing our mindset. This is a shift in mindset. So I'm telling you, at the crux of it, it is a shift in mindset, because it's almost like we're going from becoming customers to becoming sellers, right? If you ever seen Baby Boy, what'd he say? Jody say, there are sellers and there are buyers, right? So we're becoming sellers. We're looking at the value of things and the going rate that the market places on those said things. and we're maneuvering within it. Whether you're in the grocery store and you're waiting for the produce to go on sale on Tuesday, because you know every Tuesday at the organic grocery store, produce is 10% off. Yeah, we know that. And you know if you use your Discover card, you're going to get 5% cash, a cash back on grocery store purchases. We know that, right? And you know if you get the membership at the store, you get an additional 10% off. Whatever it may be, we always need to be thinking like that. And I'm not saying you can't say like, you know what, I don't care what's the price. I'm not looking at price tags. Let me buy that. Let me buy that. I want this. But what I'm saying is we need to always be cognizant of the market value for something. And if it's something we want, we can make smart purchases, right? That's why I mentioned when we started, you don't necessarily need to go ahead and get the brand new Benz truck, the brand new G-Wagon 2022 for 180 with all the bells and whistles. Maybe you grab the 2020 joint for 80K or something like that, right? 110, same thing, not that much miles. Who are we trying to impress? If you love that 2022 and that's what you got to have, make it make sense. Get your bag up, get your wealth up. But you don't need to go broke on these purchases because that's not the way we do things. So there is a balance to it, but we need to just be aware of our purchases. We don't want to just be in this perpetual phase or stage of being a customer. So what I'm going to do is list off a few types of investments, and I'll touch on them, but we won't go too in depth in them. But over this series of the podcast, we'll have episodes dedicated to each. We'll bring on guests who are masters in those certain areas, and we'll pick their brain. We'll get a bunch of free advice, right? This podcast is free to the world. Information is free now. It just needs to be curated properly. And that's what my goal is, to curate this information. Because for me, I think like there's no need to sell the knowledge. It's going to be up to you as the person. Are you going to take control of your life? Are you going to actually do these things that are needed to succeed? Are you going to show up every day to trade? Were you up this morning looking at the charts? Did you lose a trade last night but still show up today? Did you decide to take today off? Did you back test last weekend? Have you been not tricking off your money? Have you been investing it? Did you buy the dip on these cryptos? These are the questions, okay? These are the questions that are going to separate the boys from the men, the girls from the women, okay? Or whatever you identify as. What I'm saying is we are adults. We are people that are taking control of our destiny. This has nothing to do with gender. So when I mentioned feminine and masculine energy, when I say we're going to utilize both, think a little deeper. So that feminine energy is going to be that creative energy, right? I kind of link that to the mindset side of things. And that masculine energy is going to be that physical, do things, material, right? So we bring it together, the creative with the material, and we bring those visions to life. So, yeah, I just want to kind of say that while we take things a little deeper, while some people still get to learn me, learn Elwin, and understand where I'm coming from and understand my intentions. So what are some of the investment vehicles? Okay, we have, and I do apologize because not all of these investment types are going to be available in all countries. If you're in the US or in North America, or even in Europe, we definitely benefit from having more types of investment tools and ways to store our money in counter inflation. Okay, so number one I had is index funds. So index funds are gonna be composites of different stocks, okay? They're gonna be these funds that are put together by different brokerages, right? So Some may be Fidelity, TD Ameritrade, Vanguard, these different index and mutual funds. So what are some pros to these types of investments? The good thing about these investments are they're generally gonna have a solid track record. So there are some new ones, but a lot of these are gonna have a track record of 30 years or more, okay? Think of a fund like the S&P 500, which is a composite of the top 500 stocks. This fund goes up every year or generally. So even with the big COVID crash or big dip, whatever, the S&P 500 just continues to rise year after year. And you may say, how does this thing just go up? Let's think back to inflation, guys. It's because the dollar continues to inflate. So the value of that will continuously go up. So what am I saying? What I'm saying is, instead of sitting that money in savings, instead of just spending it on something that won't counter the inflation, that won't grow, put your money in these funds. So these funds can range, let's say, 3 to 15% on the higher end. So you really, and I will say for those who have learned day trading with me, this is where you can really shine, because you're going to be able to pick good mutual funds, good index funds, and pick good times to get in based on structure, based on a lot of things you've done in your day trading. So that's one thing to be aware of. Also, you can get in these funds without structure. You don't need to be a day trading wizard, right? You can do something like DCA, dollar cost averaging, where you take a portion, right? What do we say? Each week we want to pay ourselves. So let's say each week you take 100 out of your money, or each month you take a few hundred and you put it into your S&P 500, regardless of where the price is. Now that is dollar cost averaging. And over time, what will happen is you'll grow that money. And so what I'm saying is, guys, there are multiple ways to make money, multiple ways to invest, and we can do it however we want, but you need to be investing. You don't need to be a chart wizard. You just need to have a deeper understanding. You need to just shift that mindset, and that's what we're doing. Okay, one moment, and we'll just go ahead and get into our next one here. All right, so we have individual stocks. So similar to mutual funds, but different. So an individual stock is just going to be one stock. You pick it. They're not curated by a brokerage. You pick the stock. Apple, Microsoft, you can pick a penny stock, a bank stock, whatever. There are dozens, thousands, probably a million stocks out there. Okay, different exchanges. We have the NASDAQ exchange, right? We have different exchanges that we can trade on. So we have the New York Stock Exchange. And from there, these stocks, they can drop, they can go up. It's going to be a little different than mutual funds because you're kind of putting yourself more out there by hand picking, cherry picking. But the beauty is you have more control. And while a mutual fund may cap at 10% growth, 5% growth, you can hit a stock that triples up in a day. Now, they're rare in some, but the thing is you can find solid stock investments. We've seen all the hype stocks, right? The GameStops, the AMCs, but there are other stocks that have gradual growth, steady growth, and we're seeing them come up, like Tesla's coming up. But look at something like Apple, Amazon. If you just dollar cost averaged into Amazon for the last 10 years, you'd probably be a millionaire by now. So this is the long game we're talking about. This is how we grow wealth, not just how we get money. So I'll always talk right to my traders, my Forex traders, my crypto traders, because that's where my heart is. That's how I got into it. For us, we hustle. We out there getting bread on a weekly basis. But What happens when we can't trade? What happens when we burn out? What happens? What happens if we get sick? We need to be able to have our money working for us. We don't want it just sitting in our savings account, our checking account, our Forex broker. No, we need to be parking this money. We need to be diversifying. That's very important. And we'll get into diversification because I think it's important you have a wide array of investments. That way you're not dependent on one thing. Okay. If you put all your money in one stock and that stock go down, you're screwed. If you spread your risk across maybe 4 financial instruments, maybe you have 30% in mutual funds, 20% in individual stocks, 10% in savings and bonds, right? 30% in real estate. You could chop it up how you want. That's the fun part, but you got to chop it up, right? So this is designing our life. This is designing our empires, building our legacies in these capitalistic times. Okay. What are some other investment types? Real estate. So you could get into real estate funds. I'm not too versed in them. I'll bring on guests who are, but you can invest in different funds that are for real estate without actually getting your hands dirty. Or you can buy property, get out there, buy a house, buy a commercial property, things of that nature. Now, you know, that's going to be a bit beyond my experience so far because I haven't gotten to real estate. Most of the stuff I've invested in, you don't actually touch it. It's just click, 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 transfer, click, transfer, click, transfer. But real estate is a sound investment when done right. And it's been around forever. People need a place to live. And the rates of real estate go up and down. So what does that make it? It makes it a living, breathing market. So what, you buy low, sell high, that whole game. So there are ways to make money there. And if it's something that interests you, start to do your research. And I know that there are a few of the homies that are into real estate that are on the come up. So you can always like hit us up in the telegrams or on IG and just engage. And just, you never know. You know, I do plan on organizing things a bit more where we can all kind of communicate and expand from simply just Forex trading, because I noticed that a lot of us have this underlining goal of essentially changing our life and becoming what? Financially free, like we always say. So these are the ways we do it. We learn to make our money work for us, no matter how cliche that sounds. So what are some other investment types? Retirement accounts. Sounds, why am I thinking about retirement? I'm getting rich now. That's that mentality we're shifting away from. And when I say retirement account, I'm not saying you work till you're 60 and then you can chill with that retirement account. When I say retirement account, I'm talking about accounts like a Roth, right? Like a Roth IRA, 401k. If you work with a job currently, your job may match you. So if your job has something like a 401k, look into it, guys, because it might be free money you're leaving on the table just because you want to maximize your check now. So if your job matches 50%, if you're at like a campus at a university, they may match even higher. So what is that? That's free money. And then that money will go into a money market that generally goes up, right? What I'm saying is these funds, these investment vehicles you get in, you'll look at their track record and you'll see, oh, for the last 50 years, they've gone up. So these are fairly steady investments, low risk, not low risk, maybe medium to low reward, but anything beats is sit in your savings, because with that, it literally just loses value, right? So retirement funds, I personally have a Roth IRA through Fidelity, and I do pick my own funds, just like I pick my own stocks, my own trades, my own cryptos. And I'm currently invested in a few medical funds. because, big pharma ain't going nowhere, right? All right. So those are a few of the more so steady long-term investments. And you want to be very clear when you're investing in those type of longer term investments, because a lot of them will come with penalties if you try to pull out your money, right, too fast. You have to wait. For instance, with stocks, you're going to have to pay capital gains tax on those profits. And you'll want to look into it, but those rates change. So if you take out money in the first year of that stock, you're going to pay more than if you left it. Okay. There are penalties for pulling your money out of retirement funds. That's why Roth IRA is nice. Roth IRA is nice because you don't incur those penalties. And now everything I tell you guys, you need to do your own research, or you need to hit me up and we'll go over it, but always do your own research. Okay. So let's go ahead and think about more volatile, more high risk investments and more short-term investments as well. But the first one I had was Forex trading, right? That's what we do. And to me, any type of trading is an investment. Okay. Any type of trading is an investment. Even when you scalp for 10 pips in 12 minutes, it was a 12-minute short-term investment. So everything is an investment. So Forex, we're leverage trading. And for us, it's more short-term. Even our swing setups may go a couple weeks, but that's nothing when we're talking about holding for years, right? When we're talking about the person who dollar cost averages into Apple for 20 years, opposed to us hyper scalping on the 1 minute time frame. But although very different, very similar. They're the same thing, just on different ends of the spectrum. So Forex trading is super high risk, guys, but this is what we do. If Forex is something you're interested in, I've been trading it for a few years now, and a lot of my crew, this is what we do. We have different trade styles and we love it. We love it. It's not for everyone. And a lot of people, they get into Forex and they just say, you know what, it's too complicated. It's not for me, but it's for me. I guess it's just for me. I love it. And it's really made all my other investing just so simple for me. It's like when you're batting in baseball, Forex is like, everything else is like you have a donut on the bat. You get to Forex, you take the donut off, right? It's going to be tough because the degree of difficulty is up there and the margin for error is it's up there. We use really tight stop losses. When we're investing in stocks, in different funds, we're generally not using stop losses and take profits. But if you don't know what a stop loss is basically a level you set with your trade. It is a parameter within your trade. If you say, if price goes here, it closes my trade. It stops my loss. Okay. Even if it's in profit, you're stopping that loss within profit. So with us doing that, it's allowed us to become very, very, very precise with our trading. And yeah, that's what we do. So even if you're not into Forex, I recommend you give it a glance and just understand it, because Forex is what the world moves on. The foreign exchange, the whole economy is Forex. So for us who have learned Forex, and now we take that knowledge and we apply it to other areas, other fields of understanding, man, we're at a very high advantage. We start to understand world economies, how they move, how they do this dance, right? So it's just beautiful, guys. Now, I got one more investment type, and that is cryptocurrency. And cryptocurrency has been very dear to my heart. I made my first small fortunes through it, got myself off that check to check life, and was able to fund my trading account properly off of it to where I don't require a funded account. However, I'm actually going to be getting funded soon here. But yeah, just to not be not have to require being funded to trade a proper lot size is a very empowering feeling for me. Okay. So, yeah, cryptos, we know they're super volatile, guys. When I say cryptocurrencies, I'm talking about the Bitcoins, the Ethereums, the ADAs, all of those guys, as well as all the meme coins, the shit coins that don't do anything, that the pump and dump coins. They're all under that umbrella. So they're super volatile, and you really need to know what you're doing when you're getting into them and understand them. So it's very new, guys. We'll definitely go into cryptocurrency, but there's a basic understanding is currency. It's digital currency that's decentralized, and the central banks don't have control of it. And it's a way that essentially the people are able to almost liberate themselves from the big banking cartels. And it's really shaking up the world. But what's super cool about it is it's all new, and a lot of wealth is being shifted through it. We got people making hundreds of millions overnight out of nowhere. If I would say if there's one thing that you can get rich quick from, that you can get rich overnight from, it would be cryptocurrency, right? Everything else is going to take time, dedication, mastery. But with cryptocurrency, you can actually hit lotto. And I'm not attempting to entice you, because in the same way you can hit lotto, that coin can go down 100% in the same day. So many of these coins, the rugs have been pulled from under them. So the same thing for these coins. You need to do your due diligence. You need to spend your time studying the project, understand, does the project have any utility? Will it serve any purpose? Or will it more so be another Ponzi scheme? Is it something like an MLM, right? A multi-layer marketing, where people are just telling you to buy. The more people that buy, the more value that goes into it until the people decide to sell. No. So due diligence, studying, reading, looking at your market watch, looking at your Yahoo Finance, all these different sites, your Bloomberg. Maybe you have some people on YouTube you follow, but there's also going to be due diligence that we all need to do on the sources that we look at. So it's always going to be a level of discernment that goes in everything. Remember, when every field out here has scammers, and the financial areas are even full of them more. Like, people are just scamming left and right, and people get blinded by greed. So be careful. If it's something that sounds too good to be true, it most likely is. If it says learn while you earn, get rich overnight, it's most likely a scam. It's not going to work. It's going to take dedication, and whatever you do, it's going to take time, but we got time, and it's a fun process, guys. So that's going to wrap up the first episode of the Winlife podcast. I really appreciate everyone that stayed with us. And next week, we'll be bringing on guests, and we'll be tackling these topics. But for today, we want to get things cracking. We want to talk about the reality of building our wealth as we all begin building our wealth on this journey together. So thank you for listening. This is Elwin Coleman, and we'll see you next time. Peace.